This meeting is being recorded.
Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Taylor from Life Goal Investments. How you doing, buddy?
Here we go. Let's do it. Let's do it.
So I just have a couple of questions. Again, you were on Wall Street for 10 years. I want to help you translate, I don't know, stock trading terms for the novice. And the first one I want to highlight, given we are entering the winter season, is what is called the Santa Claus rally. I am curious if people on Wall Street just lick their chops and just made fun of all the retail investors coming in, or if the Santa Claus rally actually had underlying technicals going on. So what is the Santa Claus rally? Is it real? Is it not?
Yeah, generally what you have is kind of that late November. You have things where they could be choppy, and there's a couple reasons to that. So we'll talk about that. And then as you get through a couple weeks of December, kind of call it the last 2 weeks of the year, you generally get a pretty pronounced rally in the market. Call it, 2 to 5%, somewhere in that ballpark. And it's been relatively consistent, hence the use of Santa Claus rally. It's not every year by any means, but it does have a strong tendency to be a seasonally positive time frame. And I think the easiest way to explain why that happens is a lot of times, and it might be more pronounced this year for the record because of this reason, is a lot of times what people will do is do their tax loss selling going into that period. So if you think about it, if you have capital gains that you've experienced somewhere else in your portfolio, or you're looking to take a loss, you sell something at a loss towards the end of the year to offset a gain somewhere else, or to offset your ordinary income, which you can do as well to an extent. As you sell that, it creates downward pressure in the market. And everyone looks at their portfolios at the end of the year and goes, okay, what can I do to help myself out from a tax perspective? And therefore they sell at the end of the year, driving the market down in the short term. And then what you have is this reversal back where the selling stops, and then you get this rally into the end of the year for the last 2 weeks or so.
Yeah. And again, the tax loss harvesting is a real thing, from an individual stock, real stock perspective. If I was going to sell a loser, what are the rules? I can't buy that loser back for 30 days or 31 days.
Yep.
But I can buy a similar stock.
Yeah. So I'll do some numbers here. As an example, say you have taken gains in your portfolio, capital gains of $2,000, and you have a stock selling at a $4,000 loss from when you bought it. You can sell that stock at a $4,000 loss and take $2,000 of that and offset the gain you have that you experienced prior. Then you also have that remaining $2,000, which if you don't have any more gains inside of your portfolio, can then be written against your ordinary income for that year. So you take your ordinary income, you make $84,000, all of a sudden you make $82,000. Right. So you take that $2,000 and whatever tax bracket you have, multiply it out, there's your savings. Mm-hmm. But yes, to your point, you cannot buy the exact same security for 31 days. Right. And so you could trade out of, here's a good example. You could trade out of Home Depot, had you held that stock individually, and buy Lowe's. Correct. It's not that you can't own anything similar. It's that you can't own the exact same thing. But you can't trade out of Home Depot and buy back into it within 31 days. That's called a wash sale rule. And then that loss that you're trying to capture there would not be captured. Correct.
So the other thing I want to talk about, so Santa Claus rally, tax loss harvesting, it's a real thing. You should at least consider doing it. The big boys do it, obviously.
So I'll say this. If you're not tax loss harvesting, make sure you have a damn good reason. And I'm not sure what that reason would be, but if you're not tax loss harvesting, have a good reason. Otherwise, do it. And I'm a certified financial planner. That's part of what we've done. I did that for years and years on Wall Street with people that had millions and buku dollars. Do it.
Yeah. The other thing I want to talk about is I have a friend who comes on Sundays. Who's not, he wasn't on the street, but this is what he loves to do, talk about stocks. He's gone back to 1948 and talked about the stock market after the midterms always being up.
It's really good. Yes. Very good time frame.
But why? Is it, it seems odd to me that a midterm again, he's 0 times it's been negative. Now, not to say that this time, but
I should be able to rip off some of these stats off the top of my head, but something like 6 months later, to his point, back to 1948, there's never been a negative 6-month time frame after that. Don't use that as absolute gospel, but definitely direct.
It's just weird, right? It's weird. It's weird. Yeah.
So there is some reasoning behind it. So the reason behind it is the stock market just does not like uncertainty. So anytime, whether it's
heading in,
right, good uncertainty, bad uncertainty, whatever it is, just gives us some solidarity there. So like think back to this, and this isn't political, but I'll mention it nonetheless. Think back to when Trump was running against Hillary. The market said if Trump gets elected, the market is going to get absolutely waxed because he was such a wild card and it didn't like uncertainty, right? And then once that actually got chewed through, it was a day of, I think a morning of the market being
down. There's a morning of pain and then went up.
Yeah, and then the market was like, okay, at least we know relatively close to what the playbook's going to be. Let's do this, and let's figure it out from here. So when you think about midterms, you're obviously not, controlling the ultimate power of the president, but you're controlling the House underneath. And so right now you have the executive branch as well as all of Congress leaning left democratically. And so they can essentially place things into existence much more easily than they could, if they were more of a split. Now, Joe Manchin could be argued that he could be a Republican, who knows there, but he holds things up, right?
Yeah, but he might be the most important person.
Right. Yeah. In the Senate, it's 50-50. Kamala Harris is obviously supposed to be the tiebreaker as the Democrat. Joe Manchin's put himself.
But it's really Joe. It's really Joe.
But nonetheless, I guess what I'm saying here is what looks really likely to play out this year, and I don't have a crystal ball, but it looks like potentially both the House and the Senate will lean right.
I think the key is, again, I hope going to this as an American that one of them goes the other direction. I don't like either party. Let me be very clear. I don't want either party to have all the power and be very kind of skewed. I like the negotiation. I mean, I think that's what our founding fathers had in mind when they set this up. So I think that's a good point. Yeah.
Yeah. So once it happens, it really doesn't matter. And politics don't matter to the stock market in general. If you look back, Democrat, Republican, the numbers are extremely, extremely similar to the results. Extremely regardless of the results, I should say. But again, so once we get through this, doesn't matter what happens really. The market will then have certainty, and they'll get the idea that, okay, we know where corporate tax may go. We know where, regulatory environment might lean, et cetera. Now we can go ahead and deploy capital where the best use of it is based on the given set of circumstances that we now have a better idea of what's playing out.
Yeah. I think this is a lot of fun. It's really interesting heading into the end of the year. We get clarity on the election. We'll get more clarity on inflation. It's just, it's been a rough year for everybody. So video number 3, we'll talk about the average investor, but yeah, it's been a rough year.
Yeah. Well, video 3 will explain that to a T in numbers, unarguably.
They're not good. Just a hint. Taylor, where can people find you? Yeah,
find us at Life Goal Investments on Instagram, at Life Goal Investments. Appreciate you, Michael.